Good morning, everyone. Welcome to the morning kappa at 8 on a Wednesday. I'm here to present the midweek futures traders technical brief. And this is the week 2, August 2025. Again, this is a table whereby I will show every single week. And this shows the most popular products traded by traders. Noticeably, the US indices have been on a run and has been chalking up new highs almost on a weekly basis. And this shows that the strength and the momentum of the underlying market in US is still intact. And the other product that we have noticed that Nikkei 225 is also been achieving new highs, and therefore the trend and also the setups are still on a positive level. On a more neutral note, we see corn, soybean oil, and soybean, and even the metals, gold, silver, and copper, all have refused to budge from their neutral position. Every time there is a attempt to move up or move down, the prices have actually come back to neutral levels, and more specifically is nearer to the VWAP levels that we have been monitoring. For crude oil as well, it's been trading neutral for virtually the third or fourth week in a row. And for this, we potentially can see that if it comes lower, there will be some potential for more volatility. And for our own FKLI index, it's been gaining strength. It's been setting up for new highs in the position that is achieved in the previous week. So to look out for more potential upside on the FKLI, which has turned from neutral to positive. As the usual, I always like to see a neutral position, and after the movement of the market, that would be more specifically the direction that it would take after the movement from the neutral position. And we look into the FCPO. FCPO, as mentioned, has been on a uptrend. And the recent days, we have seen new highs being achieved. And this has been basically due to the anticipated of higher export volumes, which have actually been shown in the first 10 days of August, with Intertech reporting 23.3% and also MSPEC up by 23.7% rise in shipments. So FCPO is in a good place. We are foreseeing that there will be potential upside. As we turn to the US indices, we noticed that the S&P 500 registered an increase in 15,000 lots of short positions. Potentially, these are hedging positions whereby some portfolio managers are seeing that prices have risen substantially, and it's time to hedge those positions. The Nasdaq also had short positions increased by 16K, whereas the Dow Jones perked up by 2.4K. So this is the commitment of traders for US indices. And we will look into the micro S&P, whereby we are looking for a potential short-term movement on the downside. And this trend that we are seeing from the S&P 500 basically is the reported consumer price index, which has risen 0.2% on a monthly basis in July, while annual inflation came in slightly below forecast. And this has drawn calls from the President Donald Trump to lower interest rates. And CPI data is supportive for equities overall, and getting some good news with the Federal Reserve more on track to cut rates in September, and also potentially more in the fourth quarter. So for this, we are looking for a potential trade here. Current profile of the S&P 500 remains to be positive, But the short term, because of the overbought situation, we are looking at a potential negative setup. Current price is at 6,466 and the reference price at 6,445, and that's the level to watch. And potential profit we are looking at will be at 6,495, giving a potential profit of 325 and a loss of above 6,410, and that's a value of $250. And for energy, we saw crude oil long position decrease by 3K. Other products in the basket saw shorts reduce. This included natural gas, which saw shorts dip by 7K. So if you refer to the micro crude oil chart, we see that there is an attempt to break new lows. And basically, this is the possibility of some progress at the Trump-Putin summit in Alaska on Friday. And also, the oil markets remain concerned about a oil surplus after the EIA on Tuesday raised its forecast for 2025 global oil to 1.7 million barrels per day from 1.1 million barrels per day. So for this, we are looking at a short-term setup which is positive. And of course, like mentioned, the existing profile is neutral. And current price is 63.90. And the reference price is 63.90. And this is one level whereby we see the prices to increase and above. Then there is still a potential little bit of upside. And that would be 65.10, which will give us a value of USD 120 and a potential loss price of below 62.40, and that gives us a value of a loss of USD 150. So this is all I have for today. Thank you so much, and I'll pass on to Joseph. Thank you.
Okay, all right. Morning, everyone. Welcome back to Morning Kappa, and thank you, Vincent, for the weekly futures technical setup update. Looking at the Hang Seng, right, I can see that the Hang Seng have slightly edged up yesterday, climbed above the 20 days moving average, showing that the bulls are still in control, and the Hang Seng is trading in the bullish territory as well. So yesterday night, the HXC have experienced fresh positive price actions. Looking at the indicator, right, the HXC also climbed above the 20 days moving average. Momentum is re-accelerating right now. So basically yesterday, during morning, right, we read a piece of news that Trump or the US government is going to have 15% profit sharing on, or the tax, right, on the chips that actually export to China, right, and the news have boosted sentiment on this foundry in the China, which is the SMIC, right. They have reversed the losses for the past two sessions, and right now they have charted a bullish candlestick, right. In technical world, right, this will be regarded as a morning star pattern, right. So you can see that the 4650 will be the immediate support for SMIC, right. If FMIC climb above 52, then on the very likely is going to continue the bullish trajectory. Now looking at the price volume again, right, stop loss level, a very important major support will be at 41 Hong Kong dollar. So overall, you can see that the Hong Kong market right now, I would say that remains bullish so far. Yesterday night, right, texted one of the investors. So we were talking about CGN Power and CGN Mining, and I just realized that this CGN Power, the stocks have been actually moving on a high basis. CGN Power, basically, they are doing in the business of nuclear. They are actually building the nuclear technology and doing the nuclear plant, and some of their clients include the European government like UK. Right, you can see that the CGN Power has been in our list for some time. Under the CGN, there are a few listed co, but I will prefer that we look at CGN Power, which it has a nuclear story, and can see that the share price has been charting on a higher high so far, and the share is actually trading at 3 Hong Kong dollar, right? So it appears relatively cheap, and the beta is high. The other counter that quite interesting would be Geely, right? You look at the Geely, share price have underwent a corrections from May, June, July, and right now it's steadily climb up and testing the 1950 resistance. So looking at the Geely, apart from it has a very famous shareholder, right? What we do see here at Geely is it has the beta is high. You look at the trading view, software beta number is actually 1.08, which means Geely, the share price when it runs, it always beat the benchmark index, which is the Hang Seng index. So if you believe that Hang Seng will to move higher, right, then on one of the index member or tech stock index member, Geely definitely will be one of the beneficiary as well. So I think the under the EV segment, right, apart from BYD, NIO, right, the next counter or the in the auto sector, right, Geely will be one of the limelight. I can see that Geely is testing the 1950 resistance so far with a high beta reading. And then on so this morning, right, our trading stocks firstly we'll be looking at the Geely 175 1950 breakout. Next resistance will be 22, followed by 24. Downside support 1750. Then on another index stocks, which we look at the Hong Kong market, right, whenever there is a strong momentum, right, a commodity sector or commodity related stocks will be one of the darling of the market, right? So we look at the Aluminium Corp of China, 2600. You have break past the 6 Hong Kong dollar 60 cents. Next level will be 720, followed by 780. Downside is 6 Hong Kong dollar. Yesterday night, S&P have clinched to a record high, right? Showing that sentiment remains bullish on the US market. And one of the counters that I just want to remind is that last week we had a technical writing on the C Limited, which is a Chinese stock that lists in the US market. I think everyone should have quite familiar with this Singapore-based company C Limited, right? And they have actually underwent corrections, and yesterday after the earnings, right, the share price have actually a strong gap up and now trading higher. It have reached $170 and next level will be 180. Soon they may hit towards $200 level, right? But overall, right, again, SE is one of the stock that under our watch list, and we have actually highlight that this stock should be red color, means a stock that you should actually pay attention to. But too bad sometimes we can't have a very perfect of a support level, right? Just a few days ago, C broke the support, but right now it managed to have a strong gap up and move higher. So what we need to do is not to give up, but to continue to follow on a good fundamental counters, and then using fundamental stocks that we actually overlay with technical levels, and we will be trading all the technical level as we can see, as we can. Okay. Now another counter that have caught my attention would be Delta Airlines. Yesterday, you look at along the airlines company from Delta Airlines, DAL, UAL, AAL, right, American Airlines, all the share have surged higher yesterday after the airline companies proposed to raise their airfare. So for Delta Airline, right, the next level will be 60 and followed by 65. And looking at our watch list, right, UAL and DAL, right, these are the two airline companies under our watch list, which you look at the news, right, market is anticipating a strong recovery in the travel, in the air travel space. Okay, and Now, in terms of the US stocks on the bank, right? Some of the retail investors also texted me what are the bank stocks that we can actually look at. I think among the bank stock, what caught my attention is actually Goldman Sachs. During the latest quarter, from April to June, their trading department have generated a very strong income. And as you know, that the market has been volatile from April to June. Not a lot of us can actually make a very good gains because in the April month we were disturbed by emotionally by the tariff news. But these are Goldman Sachs traders, right? Due to the market volatility, right, they managed to record a very handsome profits. And you look at the price volume, right? The very high volume has been recorded at 700 US dollar, and right now the shares just break out from this resistance level. So since after the breakout, right, the next higher level would be possibly heading towards 880 level. Now, another counter that we also posted a technical piece last week was METC. This is a company, Ramoco Resources, that actually in the rare earth mining in the US soil. So after the last week, we saw two green candles, and then after our posting, the stock actually came down. But this time around, METC did not close below our support level, which is the 20 US dollar. And since then, for the past five consecutive sessions, the METC, this counter, have been moving on a higher high fashions. So based on this counter, last week our support level was quite good at managed to have 20. So what we look at is actually the closing price. Normally, I'll look at the closing price as my stop loss. I don't want to let the intraday price to affect my emotions, be it in my futures report or stock trading reports. Really the triggering button is the closing price. So in this instance, right, you can see that the our trade is still alive, and right now is heading towards the 25 and moving towards 28. So if you're looking for a high beta stock and also a rare earth team in the US, right, this is one of the counter METC that you actually can look at. So overall, in our list here, actually, we have quite a number of stocks that actually span across different sectors for your considerations. Okay, and in the Malaysia market, right, the FKLI continue to move on a high fashions. Climbed above the 200 days. Right now, heading towards 1580 and followed by 1600. Okay, and our stop loss is at 1485 unchanged. FCPO break above the 4003 level yesterday on the second consecutive bullish candlestick. Now, despite that, yesterday there is a long this upper shadow, right? But overall bullish trends remains intact. And the Malaysia trading stocks, firstly, we'll be looking at CTOS, right? It have climbed above the 21 days moving average and closed above 91 cents resistance. So after the breakout, CTOS may be testing the next resistance at 95 and followed by 98. And downside support is 88. Then on we have Unisem, also break past 247 cents on the back of high volume, and right now going towards 2.55 and followed by 2.65. The downside support is at 2.40 cents. So we have two breakout stocks, CTOS and also Unisem. Okay, thank you. I'll pass on to UJ on the initiation reports on the IGB Commercial REIT.
Okay, morning everyone. We are initiating coverage on IGB Commercial REIT with a target price of 72 cents. So basically, IGB Commercial REIT is the largest standalone office REIT in Malaysia in terms of market cap, NLA, and by asset as of FY24. The 10 properties under their portfolio are split into two clusters. with 7 Mid-Valley City properties and 3 KL City properties. Majority of their tenants are MNCs, embassies, government-linked company, and IGB themselves. So we like IGB Commercial REIT for its strong asset profile. The company has proven its ability to meet this evolving demand for quality space with its blended portfolio occupancy improving from 75% in 2019 to 87% in 2024. The strength of its portfolio lies in Mid-Valley City, which is an integrated urban development featuring high-end amenities, including a convention center, hotels, and its 2 flagship mall, Mid-Valley Mega Mall and the Gardens Mall. So this self-sustaining ecosystem has boosted its attractiveness as a commercial hub of offering convenience and value-added services. And as of end 2024, asset in Mid-Valley City recorded a robust occupancy rate of 93.5%, which is well above the 72% average in KL. IGB Commercial REIT is backed by IGB Berhad, one of the largest Malaysia's largest listed property companies, which enable the REIT to leverage the sponsor financial strength, market reach, and extensive network. Its experienced management team also oversees IGB REIT and has a solid track record of driving organic growth in its 2 flagship assets since IGB REIT listing in 2012, demonstrating a strong execution capabilities and deep understanding of the market demand. While management has not provided any guidance on near-term acquisition, we believe that the REIT is well positioned to pursue inorganic growth given its healthy balance sheet. We see potential for portfolio expansion via the acquisition of 2 office towers located within the integrated Mid-Valley South Key development, namely the North Tower and the South Tower, which are currently under the sponsor's portfolio and could be injected into the REIT over the medium term. For the forecast, we forecast 3 years earnings CAGR of 14.5% underpinned by improving occupancy rate, operating leverage, and interest cost saving from the recent interest rate cut. We derive our 72-cent target price based on DDM valuation, and our valuation implies a price-to-book value of 0.8 times for IGB Commercial REIT, which is slightly higher than the Central REIT and UOA REIT. And we believe that this valuation premium is justified given the IGB REIT Commercial REIT larger market cap, higher quality portfolio, and significantly lower gearing level. Our target price implies a dividend yield of 6.5%, which translates into 310 bps over the Malaysian bond yield, which is slightly lower than the historical average spread of 340 bps. And we believe that investors may accept a narrower yield spread if IGB Commercial REIT continues to improve its blended occupancy through proactive leasing strategies and potential acquisition. Yeah, that's all from me. Thank you, everyone, and see you guys again tomorrow. Thank you.